Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about HELIX Energy Solutions Group Inc. quarterly report. HELIX Energy Solutions Group, Inc. provides a wide range of services to the offshore energy industry worldwide. Some of the key businesses and services offered by the company include well intervention, coiled tubing operations, inspection, repair, and maintenance, IRM, of production structures robotics, installation of flowlines, control umbilicals, and manifold assemblies and risers, trenching and burial of pipelines production facilities, oil and natural gas processing facilities and services, shallow water abandonment, well plug and abandonment, P&A services, pipeline, cable and umbilical abandonment services, decommissioning and reclamation, offshore oilfield decommissioning and reclamation, subsea infrastructure flushing and abandonment support services, site clearance, project management, engineered solutions, intervention, maintenance, repair, heavy lift, and commercial diving services. The company serves various clients including independent oil and gas producers, pipeline transmission companies, renewable energy companies, and offshore engineering and construction firms. The stock price of HELIX Energy Solutions Group Inc. has dropped significantly over the past year due to several key factors. A major contributor was the challenging market conditions that led to a revision in the company's stock evaluation, resulting in substantial declines. Additionally, despite revenue growth, HELIX experienced a decline in net income from $29.51 million in Q3 2024 to $22.08 million in Q3 2025, raising concerns about its profitability and long-term financial sustainability. Analyst downgrades also played a significant role, with Zacks Research, Weiss Ratings, Wall Street Zen, and Raymond James Financial issuing sell ratings or lowering their price targets. Furthermore, the company's Q3 2025 earnings missed street estimates, and it faces financial challenges such as a distress-level Altman Z-score and declining operating cash flow growth. Market volatility and commodity price sensitivity also negatively impacted HELIX Energy Solutions' revenue and profitability due to its involvement in the offshore energy sector. These factors combined have led to a year-to-date decline of 32.19% and a one-year return as low as -41.1%. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by increase in prepaids, plus $12.31 million, higher average sales prices for oil and natural gas liquids, significant increases in short-term and long-term revenue, with 47.6% and 117.6% growth, respectively. Revenue decline is primarily attributed to decrease in production volumes due to lower drilling activity, increase in operating expenses. Net income for the company decreased by $7,431,000 from 2024 to 2025. This decline is evident in both the 3- and 9-month periods. The net income margin also suffered due to reduced gross profit and increased interest expenses. The decrease in net income can be attributed to several factors. In the well intervention segment, lower revenues and higher vessel costs contributed to a 9 percentage point drop in gross profit margins. Conversely, the shallow water abandonment segment saw an increase of 3 percentage points in its gross profit margin due to lower costs. The robotics segment also experienced a decline in profitability, with a 5 percentage point decrease in gross profit margins. This was largely due to higher costs and lower margins on certain projects. Overall, these changes in profitability have led to the decline in net income and profit margins for the company. The company is indeed generating positive operating cash flow. The financial summary highlights a significant increase in net cash provided by operating activities from $108,051 in 2024 to $23,586 in 2025. Additionally, the free cash flow for the 9 months ended September 30, 2025, stands at $12,940, indicating a positive trend in the company's ability to generate cash from its operations. The performance of various segments and regions within the company has been mixed. The robotics segment stood out as a strong performer, with an 18% increase in revenue and a $3.8 million increase in gross profit. The shallow water abandonment segment also showed improvement, with a 4% increase in revenue and a $6.9 million increase in gross profit. On the other hand, the well intervention segment struggled, experiencing a -9% decrease in revenue and a -68% decrease in gross profit. Similarly, the production facilities segment performed poorly, with a -11% decrease in net revenues and a -33% decrease in gross profit. The North Sea region was also subject to seasonal changes in activity levels, which may have impacted performance. However, specific information on the performance of regions such as U.S. East Coast, Brazil, Asia-Pacific, and West Africa is not available. Management is optimistic about the company's outlook despite a potential slowdown in activity levels in 2025. The company will continue to focus on renewable energy through its robotics segment and maximize production of existing oil and gas reserves for customers through its well intervention segment. In the long term, growth in renewable services is expected due to increasing global energy demand and offshore renewable energy developments. The company's cash flow position is also secure, with sufficient funds to support operations over at least the next 12 months. The company's financial summary reveals that it has made a deliberate decision to prioritize reinvestment over dividend payments. Despite its profitability, the company has chosen not to distribute any dividends to shareholders. This suggests that management believes in retaining earnings to fuel future growth and expansion. There is no mention of share buybacks, indicating that the company is focused on investing in its business rather than returning capital to investors through this means. Supply chain disruption looms ahead. The financial summary highlights a pressing concern regarding the shipping industry's supply chain. A soft rate environment is expected to lead to underutilization of vessels and systems, while reduced demand for shallow water decommissioning services will further exacerbate the issue. This perfect storm of factors threatens to disrupt the supply chain, potentially leading to inventory buildup and other operational challenges. That concludes the financial summary for HELIX Energy Solutions Group Inc. Feel free to comment below, and I will be happy to answer them when possible.